think the context of emerging markets is evolution. We are moving beyond foundational, basic emerging markets that's driving convergence. China is at the forefront of that. Historically, it was about manufacturing, exporting to the U.S. consumer. What you found is that they have really focused and honed in on the future of technologies. We've seen that in terms of EV penetration. Today in China, for example, over 50% of new cars are EV. You're seeing that in terms of battery storage. See some of your biotech areas. So you're seeing a focus on the next generation of technologies. And the context is that emerging markets is not just a convergence story. Parts of emerging markets are driving the fourth industrialization. We're seeing that in Asia, North Asia as well, Taiwan, Korea, particularly around some of the AI themes.
So for a while there, my China proxy is Alibaba. That's it. That's all I know. And then it was doing so well for all the reasons we all understand. Then the government came in and put the kibosh on a lot of the tech there. And that was 3 or 4 years out in the desert. Nobody could care about China. It's back, right? And why is it back?
I think it's back because there's pragmatism in Beijing. We need to bring back the private sector and engage and develop that social contract with the youth. I think it's also the fact that there's been a lot of innovation. DeepSeek earlier this year highlighted that China is in this race. They're evolving. And the context of these are national champions that are helping drive and evolve the economy.
This is too important. Over the weekend, LVMH announces 4 new Tiffany's and Louis Vuittons and all that in Beijing. Great. Lazard's telling me that we have a Xi shift back towards Deng, back towards a more capitalistic China. Do you actually observe that at Lazard?
So I think it's really important to understand your alignment with Beijing and understand your alignment with the major companies. In emerging markets, you do tend to find that state-owned enterprises are majority controlled by the government. I think the context here is that it's not a monolithic story. You have to understand the nuance, and the nuance is quite important. We spent a lot of time understanding that dynamic with the major shareholders. What's the vision of these businesses? But I do think the context of the last couple of weeks is showing Mr. Trump and Xi are speaking to each other. These are 2 very important economies, and the context of emerging markets more broadly is we just finished a lost decade for the asset class, and now with emerging markets up nearly 30% year to date, investor interest is starting to improve, and it's not just about short-termism in these assets. We're seeing parts of this asset class are driving innovation. There's the development of foundational opportunities. Think about India today, for example. The middle class in India is the story's just starting. Per capita incomes there just started are around $2,500. You're seeing a shift occurring where people are traveling, consumers are buying homes for the first time. Think about Latin America. Rates are so high today. You haven't even seen a credit cycle. We're starting to see the beginnings of a credit cycle. And through that whole backdrop, I think that the level of maturity across the emerging markets in terms of central bank monetary policy has been quite orthodox. They learned their lessons from the taper tantrum back in 2013.
I know you have a big exposure to, a little birdie whispered in my ear just a moment ago, in China and in Asia. Talk to us about India, though. You just mentioned India. I mean, a lot of folks were telling me when China was maybe not investable, but people were just down on China. People were saying, don't worry about China. Look to India. That is the next story there. How do you guys think about that?
So long term, we believe in the India story. I mean, as I mentioned, the economy is now hit around a little over $3 trillion, 2,500 per capita. Consumers are consuming for the first time. People are buying homes for the first time. You're seeing that development. I think from a national strategic context, India wants to be in the global supply chain manufacturing side. Yep. I think Modi is very much focused on helping sort of move the society from the agrarian to more urbanization. Valuations are challenging in certain areas, but I do think that looking out over the next 10 years, we think India is the largest, fastest growing economy, and GDP should double.
Is there anybody at Lazard not from the London School of Economics? Is it like an Orzag requirement? You have to have some LSE in you?
I think economic history, I studied at the London School of Economics, really important, helps you develop context, particularly when thinking about geopolitical events and investments.
A threat to society are people that haven't studied any economic history. Right, just as simple as I can on India then as well. Please discuss tariffs, the summary of Lazard's thought. Paul had this yesterday. How can we be over the tariff angst yet? We're not, are we?
We're getting close. the expectations that we would have seen a trade deal early in July, and that did not occur. I think we're now at a point where there's more optimism on that side. We're hearing favorable dynamics. I think there's been more dialogue between the two. I think the context of where India can serve as a true partner with the United States, from manufacturing, India needs to also improve and modernize a lot of its industrial sector. And then at the same time, the large non-resident Indian community here in the U.S. and the private sector are quite engaged. So I'm optimistic. I think that we're going to see some positive developments over the coming months.
As an emerging market manager, how much time do you spend out of the U.S. visiting these countries?
A lot. It's a key part of the job. I will say what's really important as an investor in emerging markets. You have to be. You need to think holistically. It's not about just traveling and meeting companies and reporting yesterday's news. You've got to stress and push some of the scenarios. I think we also have the ability as a global emerging market investor to bring perspective. So how the development that we're seeing in China, how does that impact the path that a country like Brazil is going to experience, or what Mexico may be doing right now around tariff negotiations? So that is really important. I think we view that as an edge, and then as a result, because we represent long-term money, we can think fundamentally, and that to us is the market inefficiency.